I would also say that we are witnessing a shift in power, in financial power from the West to the East. Because the reality is he who holds the gold or she who holds the gold retains the power. So I think we are witnessing that, whether it's China or it's the US or it's the EU or it's anywhere. Do you really think you're going to hear the truth out of these guys? The US admitted to buying stockpiles more of gold. The job is really public perception. It's really do what I say and not what I do. And so what do? They lie and they lie.
Lynette Zang, Chief Market Strategist at ITM Trading, discusses a perceived shift in global financial power from the West to the East, emphasizing the importance of gold holdings. She expresses skepticism about the transparency of governments, particularly regarding their gold reserves. Gold reserves in China reached an all-time high of 2,191.53 tons in Q3 2023. But some analysts suggest that China and Russia may not disclose accurate figures. Lynette asserts that manipulating the visible price of gold and creating the spot market aligns with historical discussions about the gold standard. She notes that central banks use various monetary policy tools to influence markets, emphasizing the crucial role of perceptions in economic stability. Some gold enthusiasts strongly support the argument that gold price suppression has been ongoing for years, if not decades. This perspective suggests that trading in the gold market is manipulated to depress the market price for gold. Advocates claim that gold would be substantially higher if this manipulative activity were exposed, acknowledged, and prohibited. Lynette's observation that gold is the only financial instrument with no counterparty risk underscores the broader concern about the reliance of traditional financial instruments on the stability and creditworthiness of governments. Gold experienced a fourth consecutive session of gains on Tuesday, reaching a more than 6-month high. This upward movement is attributed to a declining dollar and the anticipation that the U.S. Federal Reserve has concluded its interest rate hikes. Before delving into Lynette Zang's insightful interview, consider subscribing to our channel and giving this video a thumbs up.
And that's true for every central banker in the world. I mean, do you honestly think that there is an honest central banker that is really going to tell you what is going on? And that on a global basis, what the central banks did to manipulate the visible price of gold, and the spot market was really created to manage how we think about gold. You can read Greenspan's comments. It's not what's true that counts. It's what's perceived to be true. Actually, that was not, Greenspan didn't say that. Henry Kissinger, who said that. And it's true. That is their job. So if they want to stay in power, why would they give up their gold? But God, that could be leased out. It could be hypothecated. In other words, used as equity or as collateral to take on more and more and more and more debt. The problem with debt is at some point it needs to get repaid. And it doesn't matter whether you're a government, a corporation, or an individual. Ultimately, the laws of economics work the same for everybody. It's just that, hey, they can go back in and they can, from real money that you can't counterfeit, and those have tried, but nobody's really been able to duplicate this in a lab. Well, what they do, they counterfeited it with this crap, right? It's really kind of interesting because the whole world is following Japan's lead, and they've created this whole alphabet soup of stuff that really, as we're sitting here now and looking at it, and this started back in the early 90s. So I would say, yes, the whole world has been following that blueprint. But I think that it's really about keeping this together just enough so that there is a massive crisis, people get scared enough, and then they accept this next iteration, CBDCs. So what just happened yesterday, what has really been happening since, what was it, 2000, is that the Federal Reserve has been buying Treasury debt. Now, suddenly, and that is not a good thing. I mean, that's what third world countries would do because there was not enough global buying of their debt. So do I think we're following the path of Japan on a global basis? I have to say, yes, we are. But do I think that it's going to last as long as it has in Japan? No, I don't think so. I think that this is just a matter of getting all those pieces and parts in place and then having that forced, that controlled implosion. If they can force and control the implosion of the current monetary regime and then shift it into the new monetary regime, well, that's what they're looking to do. But we have choices at this point. We're not always going to have these choices. But at this point, we vote with our wallets, right? And if you buy gold and silver, that's my vote. I am getting to safety. This is the key safety trade. Look at what the Bank for International Settlements says. I mean, they say that gold is the only, not one of two, not one of three, not one of 100, the only financial instrument that runs no counterparty risk. This crap is all based on the full faith and credit of the governments. So translate that, because I don't care whether it's dollars or Canadian dollars or euros, or it doesn't matter what it is, yen, it doesn't matter what it is. It's all backed by the government's ability to create more debt. And the solution to every single debt crisis that has come up, including right now, is enabling even more debt accumulation.
The dollar experienced a decline in purchasing power of about 7.4% between 2021 and 2022 due to inflation. Lynette suggests that as fiat money diminishes, transitioning to a digital universe might retain the dollar's name to obscure its disappearance. Reflecting on the shift from a quasi-gold standard in 1971 to a debt-based standard, the escalating federal debt from $404 billion in 1923 to $33.17 trillion in 2023 signals the necessity for a new system. Lynette discusses finding comfort in holding gold and silver, emphasizing the need for a comprehensive approach, including other essentials. Meanwhile, gold and silver prices are showing strength, with February gold futures hitting a 6-month high and March silver reaching a 3-month high. The bullish chart postures of these precious metals contribute to their firm prices. The near-term outlook for gold remains bullish, with the dollar index in a downtrend on hopes the Fed will no longer raise interest rates and will maybe even cut them by springtime, said Jim Wyckoff, senior analyst at Kitco Metals. Let's get back to the interview.
If you're not looking in the right place, can you put a label on it? Yeah, it is the end of this currency's life cycle. But do I ever hear anybody say that? No. They'll talk about the death of the dollar, but they're referring to the status of the world's reserve currency. It's really simple. You have to get to good money, because this fiat money is going away. And they can still keep dollars, and they will. They'll keep the name even when we go into the digital universe. But that's so people don't realize that the dollar is gone. And I am old enough to remember what happened in 1971 when we shifted from a quasi gold standard into a debt-based standard. Well, now the debt is so high, it is absolutely not repayable. And if this new system is going to be based on their ability, meaning government's abilities to create more debt, well, then that means that they have to get rid of this huge mountain of debt. And how do they do that? Well, the tried and true method is hyperinflation. And there is no doubt in my mind but that we are clearly headed into a hyperinflationary depression, because we're seeing signals that are occurring in the money supply and in different parts of the world that have not happened since the 1930s, when they kicked off this grand experiment. That was the end of the first leg of kickoff, which actually began in 1913. This is so interesting to me, but it seems to just kind of go over a lot of people's heads, is how many references, when you're reading mainstream media, how many references they make back 2007 and 8, which is when the system died, back to 1971, 1980s when the new system was kicking off, back to the 1930s when we went into that hyperinflationary depression. So there's a reason why they're referencing back to those periods of time, and that's because that's where we are. This system is dead. What are you going to do to protect yourself? For me, obviously, it's physical gold and silver, plus food, water, energy, security, barterability, wealth preservation, community, which is arguably the most important part of that. These are all the things that we need to sustain a reasonable standard of living as we go through this reset shift into the next iteration. If you've accumulated gold and silver and you have all those other things in the mantra, that's what helps me sleep well at night. It's what's happening in the treasury bond market that people can't see because they cover it up. And even more than that, what's happening in the quadrillion, I can't tell you how many quadrillions, and nobody can, in the derivative market that's based on interest rates, which were held at those ridiculously low levels for 15 years, and all of the bonds that the banks are sitting on at 0% interest rates, bond principal, market value that are in the tanker. So will they pivot and lower rates? Well, they're going to have to, because otherwise you're going to have the entire banking system collapse. And we just got a little snicker snack of that. Do you think that that's over? No. Do you think it's just in the local small banks, community banks? No. That goes to the highest level of banks, including the Federal Reserve.
In their 2024 Metals and Mining Outlook, analysts from the Bank of America noted that the ongoing conflict in the Middle East has provided a short-term boost to gold. However, they assert that gold's performance is fundamentally tied to interest rates. The analysts anticipate that new buyers will enter the gold market once the Federal Reserve concludes its hiking cycle in the second quarter. How might the shifting dynamics in the Middle East and the Bank of America's insights into gold as a trade on rates influence investor strategies and market sentiment in the coming months? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.